Hello and welcome to the first edition of Let's Talk Business. In this show, every Monday to Friday, NDTV and BQ Prime will get you the top news stories from the world of business, finance and economy. I'm Priyanshi Sharma, and in this segment today, we'll talk about markets. Along with that, we also have some good news for all salaried employees, among other top stories. First, let's begin with how the markets performed today. Well, volatility remained the flavor on Dalal Street. Markets were unable to hold opening gains and ended in the red. Nifty traded below 17,000 levels for most of the session, and Sensex in fact tumbled 40 points to shut shop below 58,000, that mark. Now, gains in banking and metal stocks were offset by higher losses in realty, telecom and such similar stocks. My colleague Neeraj Shah joins us with a wrap of all the market action.
It was a flattish day of trade, so I wouldn't be able to call it interesting either. And it was a flat day of trade for India, despite the fact that the global markets were okay. I mean, European shares advanced and the banking stocks advanced there. When we shut shop or when we were trading, the US futures by and large were in the green. So we had our own pressures, if you will. Keep in mind that we are hitting F&O expiry tomorrow instead of Thursday, because Thursday is a holiday. And because of that holiday also, I think positions would be light. More importantly, because we're hitting the year end, the financial year end in India, most people are staying away from participating. So that's the long and short of it. Now, within that, today we had Reliance lending support, but banking was mixed. So if HDFC Bank and some others were good, some of the others were not. So that Bajaj Finance was not. So that's the kind of trade that we had today. I mean, and you know, stocks went up or down based on reports as well. IndusInd Bank was the best performer because there was a positive note from UBS, I think. Citi opened a negative catalyst note on Tech Mahindra. That stock corrected a bit. So that was the kind of texture. The Adani Group stocks were down and out in the session today. So that was the kind of texture that we had in the market. Now, what did well and what did well at the broader end of the spectrum, because the mid caps and the small caps are the ones which are losing out. So you had a Kalyan Jewellers, which had an sale by Warburg Pincus, or a Bandhan Bank, which is due to the rebalancing, or Adani Ports or SCI, which corrected in trade. And on the flip side, PNC Infra order win up about 7-8%, or a Emami or a Heikel or a Motilal Oswal when Ramdev bought some shares. So net, quiet day of trade, much unlike what was happening in the rest of the world. Maybe post 1st April, we might actually see a slightly different texture to the market than what we're seeing right now. Back to you.
And now we have some good news for salaried employees. The Employee Provident Fund organization has hiked its rate of interest by 5 basis points to 8.15. Now, the move comes after EPFO had reduced the interest rate to an over 4-decade low last year. My colleague Janani Janarthanan gets us more details on this.
The Central Board of Trustees of the Employers Provident Fund Organization, or the EPFO, has recommended an interest rate hike of 8.15%. Now, this is a marginal hike of 5 basis points from the previous year when it stood at 8.10%. This leaves an estimated surplus of 663.91 crores. Now, some quick stats for our viewers here. The board's recommendation involves a distribution of more than 90,000 crores in the members' account on the total principal amount of about 11 lakh crores. While this is a marginal increase this year, it is much lesser than what it was to fiscals during 2020-21. The percentage point was actually at 8.5. Then the cuts was introduced last year on the back of RBI's decrease in interest rates, so as to energize the economy in the event of the pandemic-induced slowdown. As you can notice, from May 2022, the RBI has been rising interest rates, which has led to about 250 basis point increase up till now. What happens from now is simple. After the EPFO's recommendation, this goes to the Finance Ministry for approval. Once the Finance Ministry ratifies this, this will go in the Government Gazette, after which the EPFO will credit according to this interest rate in its subscribers' accounts.
Now moving on to the other big story, UPI transactions made via prepaid instruments such as wallets or cards will now carry an interchange fee from the next month. That means a 1.1% fee will be levied on payments made to merchants, and the fee will be charged on transactions above 2,000 rupees. My colleague Jaspreet Singh Kalra gets us more details on this.
UPI transactions made using prepaid instruments such as wallets or cards will now attract an interchange fee of 1.1% if the transaction amount is over rupees 2,000. According to a new circular issued by the NPCI, these transactions will attract an interchange fee. Now, this interchange fee is typically associated with card transactions and is used to fund the processing and acceptance of these of such payments. The interchange fee that has been proposed by the NPCI across the board is 1.1%, but some categories within that can attract a slower interchange fee. For example, telecom operators will only have to pay 0.7% of interchange fee per transaction above rupees 2,000. Similarly, supermarkets will have to pay 0.9%, and agricultural transactions will attract an interchange fee of 0.7%. Now, this interchange fee on PPI transactions, that is prepaid instrument transactions, be it your wallets or cards, while making a UPI transaction, it will go into effect on the 1st of April 2023. And the NPCI has also stated in its circular dated March 24th that these charges will be reviewed on or before September 30th, 2023. Now, while this only covers a certain category of transactions, it also raises the question whether this opens more room for monetizing UPI further in the future.
Moving on, in a major relief for investors, markets regulator SEBI has extended the deadline to file nominations for demat accounts. So you can now file nominations till September 30th this year. And in case investors fail to update the nomination, their accounts will be frozen from the 30th of September. That's all we have for you in this segment of Let's Talk Business. You can tune in every Monday to Friday at this time to get updated with the top business stories. Today, thanks very much for watching. Goodbye.